Ethical investing is an easy sell for conscientious and discerning money managers everywhere. And why would any of us want to fund cigarettes or pokies or coal? But have ethical investors set their expectations a little bit high? Can the way that we manage our personal investments actually make a difference to the world?
Tonight's Taking Stock is with Scott Phillips, Chief Investment Officer at the Motley Fool, and Shivani Gopal, CEO of The Remarkable Woman. Scott, I'm sorry, we've got to start with you tonight because we're talking about this because this is an article you wrote that I'm sure, in the investing world would have ruffled a few feathers because this is one of these big trends that people are on. Ethical investing, everyone's feeling really good about the fact that we can change the world. You're not necessarily so sure.
I feel like the investor who shot Bambi, it's kind of one of those Bambi's mother, right? It's like, how could you possibly not have a problem with that? It's a tough thing.
Start with that, Scott.
Well, the good thing is all up from here, right? So I get it out of the way early, then I look good the rest of the segment. Here's the problem with ethical investing. If you're buying shares from someone else who already owns the shares, it makes absolutely no difference to the company you're investing in. So you own shares in some horrible mining company, I buy them from you, you buy them from me. I'm not supporting an unethical company any more than I'd be supporting an ethical company by buying their shares if it's on the secondary market, i.e. on the ASX. It simply doesn't have any difference whatsoever. So that's the first thing. The second thing to add to that is if I'm selling ethical investing as you said, Chris, as a money manager, as an advisor, as a fund, I'm getting money from people who are trying to do the right thing without really saying to them, hey, it actually makes absolutely no difference. The shares already exist, the company's already funded, whether you own shares in Philip Morris or you own shares in Green Trees Incorporated, these companies are not going to have any more or less capital because you own the shares. It's completely irrelevant to the company's purpose or objectives, frankly, how well it's funded, and yet ethical investing is all the rage because we all feel like somehow we're doing a good thing for the planet by investing, in air quotes, ethically, and it's just not true.
But what if all of us stop buying shares in, say, BHP, then the share price will go down and they'll have less money to muck around with?
No, and that's the thing, right? Because once the shares are issued, the company's got as much money as it's going to have, unless it goes to what they call a secondary offering. There might be an equity raising of some description. At that point, it absolutely matters. If BHP is raising more capital, not participating is important. But to your point, Chris, BHP was incorporated tens and hundreds of years ago. If it never raised capital after that point, it doesn't matter who during that period of time has bought the shares, owned the shares, sold the shares, lost the shares. It absolutely makes no difference. In fact, if there were no shareholders at all, BHP will keep doing what it's doing anyway, regardless of who didn't or didn't own the shares, whether they existed or not. And so that's exactly the story. People feel like I've sold my BHP shares, I bought shares in a solar company because I'm doing the right thing. It just doesn't matter. It's not true. And I think people are being misled. So there's more you can do with your money ethically.
Yes.
By actually taking the profits and doing something else with that cash. Simply buying or selling shares in different companies makes absolutely no difference.
Now, you do have a view on how a positive ethical impact can be had on the world if you are an investor. But, Shivani, just before we go to that, what do you think of all of that?
Yeah, see, I think the flip side, it's certainly a step in the right direction. And we are all such a socially aware and socially conscious people now, aren't we? Especially thanks to social media. There's always something out there that tells you where you could be better investing your money. I mean, for example, if I was a sophisticated investor, I'd very happily invest in Memphis Meats, for example, that, I think can not only save animals, but can save the planet and save, all our water resources. So, yes, Scott, you've got a very valid point. I also think that you could be putting your money into areas where your views and your ethos can match, your ethical style investing as well. And it's also one of the reasons why our money patterns are actually matching our behavioural patterns as well. More and more of us are becoming vegan because we want to be, lighter in our footprint on the world. More and more of us are using less and less chemicals as well. So our behavioural patterns starting to match the way that we're investing. And all in all, ethical funds, Scott, as I know you've talked about, will actually, outperform statistically 3 and 5 and 10 year, investment patterns of the ASX 300 as well. So, they've got some good innings.
Interestingly, if you're wanting companies to operate ethically, and as you said, there's some great examples of companies that are operating ethically, there's a way of pressuring those companies, and some of these big investors and, big super funds are now, using their power to change those companies. So as you said, maybe it's not the buying and selling of shares that does it, but it's, influence that is exerted on those companies.
Yep.
But also think a bit more, outside the square in terms of how you impact or make change, right? Because as you pointed out in an article that you wrote for thefool.com.au,
yes.
you know, in some ways, it's not always the one you think that's going to have the impact. Like invest in other companies that they can then have the power to change. So explain that.
Right. So that, I mean, the flow of money is what's important here, right? And so if you think about your ability to go and make money investing, and then taking the profits or the process, actually using those for good, that's far more useful than actually owning shares in company A, B, or C. Let's say you buy shares in a solar company, you spend 10 years owning the shares, they go nowhere, the company goes broke, your money goes away. I've paid you for the shares, so you've got your money. I've got shares that are now worthless or worth less or just simply not worth much at all. That's all fine. It doesn't help at all. If I've invested instead in something that's actually been successful, ethical or not, I've generated some profits and I want to reinvest those into helping the environment, society, whatever issues you hold dear, that's far, far more useful, frankly. The proceeds of that outperforming and buying those outperforming companies is far more important.
Like
now,
the banks have been in the past, for example.
Exactly. If you'd held the banks for 30 years, they'd lent money to guns for wood chipping, they've lent money to coal mines, lent money to whatever else. Again, they would have done that whether you own the shares or not, but if you did own the shares, then donate some of those proceeds to the cause you care about. It's far, far more useful than saying, I'm not going to buy the banks, I'll buy a terrible, ethical, in air quotes again, environmental company or something else that simply doesn't impact on the world. In fact, may even go broke and do nothing at all. It's where the money goes, what you do with those proceeds matters far, far more than what you invest in.
That's not all bad news, it's not all hopeless. It's how we approach the issue.
So, and I will say to Shivani's point, if being aware of it, the whole first step, the whole plastic straws thing, right? Not using plastic straws is not going to change the world, okay? But if it helps you think about, next time I make a decision, if I can go from plastic to metal straws and think, okay, now I know what I'm going to do for the environment, step 2 is easier, step 3 is easier. So it is that kind of journey of 1,000 steps, miles. There is some element of that as well.
Now, moving on to, I guess, a PR issue for a certain sector here. Australia's biggest banks have been using their checkbooks to dig themselves out of this PR nightmare that we've been hearing all about for quite some time now. The Big Four, in fact, boosted their community programs budget by almost 30% to $178 million in the half year to December. So do deep pockets beat short memories is kind of the way that we've been looking at this one. What do you think, Shivani?
Well, you'd really hate to think it's because of the hiding that they've recently received from the Royal Commission, right? 1 + 1 = 2, you'd hope not in this case. But look, regardless of the motives, I think it's wonderful that we're seeing, philanthropic funding go up. I think that's always a great thing. You'd really like to see the Australian companies start to match where the American companies are in terms of profit matching as well. So, Australian banks are now contributing about, 0.41% of their profits, and most, ASX-listed companies are doing around 0.6%. So you'd like to see that go to the 1% mark, which would be really good. But the thing that I think...
That's what they have in America, is it?
Yes, that's what they have in America. Right. Yes, indeed. So it'd be really good to see the trends go that way, because think about it this way, right? We have a number of humanitarian crises in the world. We've got food shortage, water shortage, climate change, gender equality. These are some of the really big things that need to be solved in the world right now. Let's focus on food, for example. If all the fast food industries contributed 1% of their takings, we would actually have enough money to solve the issue of food crisis and food shortages. So I think, all in all, regardless of motives, it's really good to see that, philanthropic funding is increasing.
Got to go back to the motives, though.
I took the high road again.
I know you're dead right. I completely agree. Look, you know what? If frankly, if society and the environment benefits because the banks are feeling guilty, then great, because there's some benefit there, right? It's hard, all of a sudden, as Shivani says, just coincidentally, funding goes up 30% in the wake of the Royal Commission. We're all supposed to think that's a good thing. The banks are absolutely on the front foot, trying to win the charm offensive. Good luck, quite frankly. If I was a bank CEO, I'd probably say, look, guys, I'm not going to win this. Let's just keep the money. It's just a terrible... And again, today we saw in the media, ASIC giving the banks a rap saying, you guys, the whole fee for no service thing, you still haven't fixed it, right?
Yeah.
So it's kind of... I got to say,
they're saying we're making progress and we're contributing to the community, and the ASIC's just looking at, are you talking that you're walking the walk, basically, and they're not. They're absolute bare minimum.
At a corporate level, I've got to say, yes, go and win the charm offensive, but tidy your own backyard up first, guys, because for all the money they're effectively wasting-ish now doing that. Every time a headline comes out saying the banks are still messing with us, screwing us over, doing whatever you want, at that level, all the rest of that money is now worthless, because again, it's the whole Big Four banks back in the dock, back not doing the right thing. Get that sorted first and then go and try and rehabilitate the reputation. But you're just throwing good money after bad if you're not going to fix up what's actually going wrong in the first place.
Good point. Well, we've seen some research, guys, that workers over the age of 40 perform their best work if they just do 3 days a week. This is some economic research that, well, it's kind of been around for a while, but it is making the rounds again. And there might be some thoughts that, you know, there's a bit of a future in this and maybe we should talk about this a little bit more often. It does seem that, the days might be starting to get colder and shorter and morale starts to drop because, you know, we're getting into March now. Where is the year going? Should we just be working 3 days a week? What do you think, Shivani?
Yeah, it is very timely, isn't it? You know, it gets a little bit cool and you think, gee, I'd love to work part-time, and wouldn't that be wonderful for all of us, right? But you know it's not going to happen for two reasons. One, you know, employees, even if they could, they most likely couldn't afford to just suddenly go part-time. And even if they could, would employers actually, you know, break from tradition and say, yeah, I think this is a great idea, I'm going to be innovative and I'm going to say work 3 days a week and take those 2 days off. We know that's just not going to happen. But what's really interesting about this, though, is it shows the way in which our bodies are built and the way that we can actually sustain work. And if you drill it down, when you're doing a really big project, think about it in that 3 and 2 manner. You know, work on a really big project for 3 days a week and then do some light work 2 days a week. Because if you do it that way, you're suddenly being able to run a marathon as opposed to a sprint. Because you know if you do too many sprints, you're eventually going to burn out. And that's what's really important. And I've seen so many people do it in different variations. So you've got some executives who simply can't afford to do 3 days of really big chunky work and then 2 days of light work. So what they do is they power on for 2 hours or 3 hours and they go for a 10-minute walk, or they do something really easy for that next 10-minute bracket. So there's different variations in which you can actually put this to practice without actually saying, oh, you know, it's getting a little bit cold outside, why don't I go and change to part-time, which, you know, most people can't afford the luxury of.
This research says your cognitive functioning improves up to the point of 25 hours and then it starts to drop off. So that's how they get that 3 day week thing. So I like the idea of, you know, building your big 3 days and then your 2 days when your mental capacity is just kind of drifting off. Just do the lighter stuff. What's your take?
I think it's great. I think you three can keep working. I'm taking Thursday, Friday off. As a token old bloke on the panel, I'm off Thursday, Friday. Thanks very much for carrying the load. I think it's a wonderful idea. So if you're looking for me on Thursday, Friday, I'll be at the beach or the golf course, something else. If you guys can carry the slack, I think, you know.
Is there a 3 day week federal election party at the moment?
Well, if they're not, there should be. It's going to get the old people vote. So I'm going straight down that path. I appreciate you guys carrying the load. It's, you know, I've worked for a few years now. It's time I kick back and just take a little bit of time
You're
off.
all on this. Actually, my brother-in-law constantly quotes this research. Like, I think every time I meet him, you know, over 40, we're only supposed to work 2 days a week. But the problem is, you kind of said, I think in there somewhere, you know, we build these financial commitments into our lives, but even if we know what's best for us, you can't bloody afford to do it half the time anyway.
Exactly.
But the smart ones amongst us.
What a reason to look forward to your 40th all of a sudden. You didn't really have one before.
Christopher's already past that, mate. Just go a little easy, all right?
True. OK, well, it's a good point. Thank you very much, Scott Phillips, Shivani Gopal. Appreciate it as always.
Thanks, guys.